All right. Good morning and welcome back to the second session for the day. It is New York, uh, beginning 8 a.m. Eastern Standard now. Uh, Prices have made their respective swing highs, and uh, now they should be catching their respective trends as per the trade setups expected. Though Euro USD to start with, let's do some three different chart case studies. Uh, for those who are just joining for the first time, a warm welcome, and let's get started, brothers. Remember, we have four trades on the desk right now, and intentionally we are not adding to the number of instruments we want to trade right now, with the reason that we've got a tough last 2 weeks. Not in the negative, but we lost our some of our profits derived in December, November, December. We are now picking up actually, and by the end of January, maybe we can get back to the same levels. I mean, 1500 pips, 1500 plus points in the currencies and metal sector, and then we would like to add some instruments as I'm planning to add an indice, a couple of indices: Dow Jones, FTSE, and DAX. Three indices at least. So it becomes six instruments that we will be focusing. Six plus one Bitcoin, that will be seven instruments, right? And we might also have different sessions actually. In New York we discuss indices, UK we discuss currencies, or all together when we extend the time from 30 minutes to 45 minutes. Whatever it is, I'll keep you all updated through the telegrams, as well as there must be some mode of communication with all the YouTube members as well. I'm going to find out that the technologies are new for me. I mean, good at charts, but not in the technology front at this point in time. Learning a lot on that front. So, to touch base with the main wave counts, we're not plotting the sub waves here. Are we beginning to a series of lower lows and lower highs in the euro? The answer could be yes and no, both, but more or less in the probable direction of on the south side for now, at least towards the 1900 handle. Even if there is a new high to be made, well, you never know. You don't need to be adamant and speculating on the counts most of the time. You might be doing something wrong somewhere, and suddenly what you see is the trend changes altogether. That's what exactly happened at 1.103, right? Remember, uh, I think it was January, yes, beginning of January 2017, and since then it has taken off everything, turning up five waves neatly. So let's not speculate much on uh, the wave counts right now, especially the fifth wave. It is almost clear that we are done with all the five waves, or maybe we are just one small leg after that. So let's focus on these shorts that we've initiated, and by any chance, if you're just joining due to whatever reason, and if you want to contemplate taking a position in euro, uh, please consider taking on the short side with a stop loss just about 2323. All right, it's a good risk reward ratio is still being offered. This is our third trade for the short term traders, and the first one still continues for positional traders. worst come scenario, it's not the worst come scenario, I'm sorry, but a probable scenario is that a new trend has resumed. So maximum, at least at the most we are expecting 1.1. It's the same story altogether. Doesn't change so quickly on the daily charts. So it's a kind of revision, but I'm keeping it low and slow, fast. I want to spend more time on the hourlies these days. All right, and at a personal level, I would not want to speculate, but I want to take my profits at 1.1550, 1.1550, and short-term traders at least should be focusing around the 1.19 handle right now. All right, so let's touch base with the hourly chart. It's now just beginning to cut loose on the south side, with the counter trend rally also supposedly being done. If you were with me in the last session, what we did was adjust the boundary and put the Fibonacci ratios across the entire boundary. What we did was this. Assuming and presuming it's going to be an A, B, C, or we also write the alternate. And that was an ABCD, ABC, sorry, in the wave terms. And using the trend line on this structure is majorly the counter trend line now, just now coming into focus. And see, the first time prices are just entering the sell zone of the counter trend line. So the projected territory for the projected wave count for the prices to take up should be like this. The Fibonacci retracements almost 786. During the UK live we were around the 61.8 mark, just above that, and what we discussed was it could push through the 786. Now it might also be working out a kind of a potential head and shoulder, where you have that's the head 23, the left shoulder here, that's the left shoulder, proposed right shoulder somewhere in the vicinity of the left shoulder, and the neckline was already taken earlier. So simply put, the conventional head and shoulder technique says that you need to just double the distance traveled from the head through the neckline. So whatever the distance traveled, 23 towards 2166, almost 200 points. So this less 200 comes to 1960, just of manual calculation. Now let's not rely on that itself. A simple Fibonacci extension says 2066, and furthermore it's also expected to drop around the 1960 and 1900. So no change as far as the short-term targets are concerned. At least focus on 2066 and take your profits over there. That would be at least fetching us 200 points, including the dollar index. If you see, we are betting on potential profit ratio at least 300 points, excluding what we make in gold. Right. So 300 points brings us almost to the level where we were in December 2017. We'll take further from there. And as far as the 4-hour chart is concerned, again, the same old story, keeping the option of a fourth wave of one lesser degree within the fifth wave. uh, it's expected to terminate somewhere around the 1930s or the 1900 levels. We will be taking a review around that price, and that would be the last time, if at all, we go and take a long call in the euro. All right, sir. So that's about the euro. Dollar index just kissed recent lows at 1920 before pulling back. That's to cut the story short. A morning star being tested, lows being tested, so all kinds of stuff happening here. Please remember, our proposed stop loss was around the 90 mark. So we are still on the long side from 90.60 as the trading point of view. It won't be a bad idea to plot the fifth wave termination point here. Still giving a doubt. Let's put a question mark as well. So 5 down, potentially done now. That's your resistance trend line and the Fibonacci ratios. I think we can cover at least 6 to 7 instruments starting next week or from February. Now honestly, I'll be betting on personal level 95. I don't trade dollar index much, but euros and gold always. 95.15 could be the potential target the bulls are wanting to hit right now, unless and until another low has to be formed. At least 90 to 60, 70 should be on cards. All right. Otherwise 95 plus. The hourly story is not changing at all. We cannot take that boundary anymore now. It's a new boundary. So I at this point in time, it's all forming. The moment it crosses above 91, I think we'll have one more new boundary to work upon. So unless that happens, let's leave the smaller time frames as it is. The only thing we would want to check is the oscillators, if at all, because we don't have a working boundary or workable boundary, I think so, at this point in time, with a new low in place. At least the RSI is turned from 33, that's a good sign. And a bullish divergence scenario is also seen. So those two are strong signals which would enable us to maintain our long calls in the dollar index for now. All right. So if you have been with me since last 2-3 days, you must have taken longs already at 90.60. The last trade we made was at 90.60 on the long side. By any chance you have not done that, if you're just joined in the Telegram or the YouTube or whatever, it's a good place, a good time to be on the long side for the dollar index as well, with a stop loss around the 90 mark. Any instantaneous change I will be shooting out on the Telegram channel, so kindly have a watch there. All right. There was a we don't need to touch base on the daily chart at least for now, but the three legs of the triangle are right in front of our screens. Wave C, wave D, potential wave E here. That is an ABC, A, B and C. We got a C, D and E being printed here. And if that wave count is correct, then we should be seeing lower levels. Let's not speculate on a very big picture right now, but at least 1310 immediate support at 13.8 should be taken off, and you don't have too many supports actually. Once it is gone 13.8, at least it should drop down towards the 1270 mark, even if it is wanting to fetch a new high or a higher high, higher low kind of a scenario. Alright, and if you talk about the trend line structure on the 4-hour chart, it has not only broken the continued trend line since 1236 mark, but it has also you see that back testing right now. Sorry, so here's the story. It broke the trend line, entered into the sell zone. Okay, this is not a straightforward criteria that is going to fall down. It's going to continue dropping down, but at least we've got a back test underway, and a bearish reaction can set the ball rolling on the south side. All right, 1325, a break below 1325 from here, that is 10 points from here, would accelerate and push prices even lower towards the major support here. I think that is 1305. So 13.5, 13.8 is the area of concentration or area of support where bears would want to target at this point in time. That would be a soft target as well, 1290. Like 1311 takes care of the 13.8, 13.10 mark, and then maybe a slight pullback. You never know, that could be wave 3 as well, and if it is, then 1290 should come very fast. At this point in time, we are going to focus on selling on rallies unless 1357 stays intact or remains intact. All right, so that was a brief summary of all the 3 trades that we've done till now. I think I'll bring the session to a pause here, and keep a watch on the US Michigan report. That's a fundamental trigger which carries some weightage. That should be coming out in about 2 hours from now, less than 2 hours. Watch out for that. for a price action which triggers a rally in the dollar and a drop in the Euro USD. Right, I'll be sending out a message of profit taking levels anyhow on the Telegram channel. But keep these numbers in your mind if you're watching me right now or in the recorded version. 2060 in the euro, and can take at least partial profits over there, and then let the remaining run through the 1950 1960 handle. All right, similarly the dollar index, to be very precise, I'm not speculating on the boundary, but if at all it rallies along with the euro USD drop, then watch out for 92.60 as a profit level. That is about 200 points in the dollar index and a couple of hundred points in the euro as well. 400 points into our kitty makes us almost above what we were in December. And gold will be another 100 points at least, 100, not 100 actually, but again 300 points. So we are betting quite a few points in these three trades, and would like to remain focused here. So that's it for now. Fourth trade, Bitcoin. You might want to remain short unless 13,000 levels are taken out. If it goes anywhere above that, then it might be doing something else. This is not the way forward. I'll touch base with Bitcoin and the next time I come here, which will be Monday UK live, UK times 2:30 AM Eastern. Until that time, have a blessed weekend. Good luck to our trades, and please like, share, and help spread the word. And do not forget to subscribe. All right. So, till the next session, please take care and God bless, brothers. Goodbye.